Hello TSW Forex, welcome to this new video that we have. This is chapter 4 of the course that we have, the TSW Forex free course. This is phase 1, and of course we have 3 phases. Phase 1 is offered free for YouTube, and it's for educational purposes. Chapter 4, this is the 4th chapter of the course, and of course we have we're going to talk about brokers in this chapter, so stay tuned and let's get ready. Okay, so in chapter 4 we're going to speak about brokers, and then we're going to talk about the characteristics of a good broker, and then we're going to look at the pros and cons of each broker. So as it relates to broker, we're going to discuss what is a broker, the types of brokers, and how does a broker make money, brokerage regulation. What is a broker? A broker is defined as an intermediary between a trader and the currency market. Retail forex traders would not be possible without the forex brokerage. Now, retail forex traders are traders like us. We don't have a bulk of money, hundreds of thousands that we trade. And usually, as we said before leverage and all those things that they offer, we wouldn't be able to trade in the forex market. So because of margin, leverage, and all that they offer, they allow the average person to can put a few $100 or $100 in their account and be able to trade. So we're going to look at some characteristics of a good broker, and some characteristics are they provide a trading platform. And of course we know that a trading platform is just a software that you go on to sell or buy. It is just a software that we use to trade. And some examples of trading platforms are MT4 or MetaTrader 4, and also we have C-Trader, MetaTrader 5, but we're going to look into that in a few. They accept deposits and process withdrawals. This, guys, is why we're trading. Withdrawals. This is the reason why we're trading. You need to get the money that you won or you have you gained in your forex trading. So they accept deposit, which is your money, and they process withdrawals. They need to process withdrawals, and it must be efficient as well. They provide leverage. Of course, as I said before, if leverage is not there, then the more money you're gonna need to trade. And promptly execute trading orders. So trading orders must not be executed late. As we said in our previous video, as it relates to forex terms, you can experience slippage, and that is something you want to avoid. Some other services offered by brokers are education. Most brokers offer education, but the education that they offer are sometimes not even organized, or even if it is organized, it is not sufficient or easily understood. So this is what TSW is for, and this is why we're providing these educational videos for you guys. Bonuses, some offer bonuses, and through different types of program that they have within their organization. Trade copying. For example, you place a trade on one account, it is copied on a second account. So that's what they do, and other resources and tools are offered as well. Okay, so we're going to look at types of brokers, and the types of brokers now, this is key, guys. I want you guys to focus, try to understand as much as possible while I speak, and take notes. This is very important. A lot of persons are having a misconception of the types of brokers. So this is what the course is about: simplicity and easily understand. So let's get this. So we have the retail trader, which is you, and we have the brokers. Now there are 2 types of brokers that we have. We have the no dealing desk, or the NDD brokers, and we have the dealing desk. Under the dealing desk we have market makers, and that's one type of broker. Under the non-dealing desk we have STP and ECN, which are the other 2 types of brokers. Then we have what? The STPs linking you to a liquidity provider. Now, let's explain each. What is a dealing desk? You're probably asking. A dealing desk is simply a broker that holds your trade within their house, meaning every trade that you place, they have it They don't pass it along to another broker. They have it in their platform or in their organization, the brokers, and then what they do is they trade against you. So if you're selling, they're buying, and if you're buying, they're selling. The no dealing desk. The no dealing desk has two types of brokers, as we said before, and it's ECN and STP. We're going to discuss each of these, but I'm just explaining how they operate for those who learn visually. So the STPs, what do? The STPs links, they act as a bridge to link your trade directly to liquidity providers, and liquidity providers are like you have banks and hedge funds and other financial institutions that comes under liquidity provider. So they act as a bridge that link you straight to the liquidity provider. Now ECN, you notice there's nothing there. So market makers do not link it to a liquidity provider. ECN does not link it to a liquidity provider. But look at this. These are the ones that trade against you. For every sell you take, they take a buy. For every buy you take, they take a sell. Non-dealing desk, NDDs. They have the ECN, STP. The STP links you straight to a liquidity provider. They just act as a bridge. And the ECN, no. You must be wondering, so what happens with the trade? All right. ECN has a database. So, for example, you have a database, right? And in that database that you have in that database. So, in this database, it is linked to banks. So we have B right there, banks, hedge funds, and traders, which is the retail trader. So we have R, RT, retail traders, and the H for hedge funds. So what happens is when you place a trade, or place a buy. So what it does is that the retail trader place a trade on the ECN database. It goes straight to the database. Same thing with the banks. Same thing with the hedge fund. Goes straight to a database that they have inside of this brokerage firm, and when it goes to the ECN brokerage firm database, if this person places a trade, the first thing the database look at is that it's looking for the pair. So it looks for the pair, plus it looks at the price, plus it looks at the lot size. So the pair, the price, and the lot size, and it tracks all the orders in this. So if you're buying, it's looking for somebody who is doing the same thing within its own brokerage firm, and it's matching that. And whenever it finds one that matches the parameter of this, the price, the pair, the price, and the lot, it executes the trade. And that's how the ECN broker works. Dealing desk. So dealing desk, only one broker falls under this category, and it's the market maker, I said before. Market makers are Forex brokers who provide their clients a two-sided market, which comes from an expert Forex trader that operates as a part of their respective personal in-house dealing desk. And of course, that's within the institution. In case the price are dealt on, the market maker Forex brokers ending up acquiring the other side of any provided transaction from their respective clients by purchasing on their bid side or selling side on their particular offer side of the specific quoted price. If a trader places a trade with a dealing desk broker, the broker will first look at a matching opposite order. So it's similar to the ECN. The only difference is the dealer or the broker is trading against you in the dealing desk. So the broker will first look at the matching opposite order from their other clients to execute the trade. When there is no matching order, the broker will assume the counterparty role and take the other end of the trade. In this case, if the trader is losing, the broker is making money. But if the trader is gaining, the broker is losing money and may pass the trades to their liquidity providers so as to avoid the risk of taking every loss. So yes, they do pass on trades to liquidity providers, but the liquidity providers that they pass it on to is very rare. It's only when they are in a loss, or it's not the main function or role that the dealing desk does. Pros of dealing desk. The spread is fixed. There's a wide range of leverages. And of course, we know the different types of leverages that are offered by brokers, as explained in the last chapter. Trade execution is instant. That is very necessary for avoiding slippage, and there may be there may not be rollover fees, or some people call it a swap or commission. Cons of dealing desk: different rates. It is common for prices quoted by the market makers to be a little different from the interbank market. So you will see a price at a specific price on the liquidity provider or another broker, and on a dealing desk you may see a different price, but not that far. Liquidity issues: there are times when the broker may not find enough counterparties to take some orders and may not ready to take the order themselves. So that will cause liquidity issues, which means, of course, the amount of money that is present. Conflicting of interest: when the broker is at the other end of a trade, there may be a conflict of interest leading to manipulating spreads and executing times or enabling negative only slippage. So that is self-explanatory. Insolvency: the broker can go bankrupt if their orders execution are not well managed. Of course, we say that they take the opposite end of your trade. So if you're always winning, guess what? They're always losing. And that, of course, can lead to bankruptcy. You want to try to avoid brokers who have or are not regulated, and brokers who have problems managing their trades. No dealing desk, NDD. As the name states, no dealing desk or NDD types of brokers lack a dealing desk. And of course, we say that a dealing desk is a broker that holds the trade within their own house or in-house trading. Nevertheless, it instead offers the best composite codes obtained from the several liquidity providers or Forex code providers that give the NDD broker its liquidity in the Forex market. Two brokers fall under these categories, and they are STP and ECN. Straight-through processing, STP. Straight-through processing brokers or Forex brokers are the types of brokers that do not have a dealing desk. These brokers hire some of the strategies of market makers in order to offer trading conditions that are more flexible to the respective clients' needs, and to be able to bypass various limitations linked with trading solely inside the interbank market. And in some situations, these brokers can end up acting like market maker brokers. Some STP brokers may decide to use complex algorithms so as to figure out between routing the client's trades to the interbank and trading against the clients, which option is more profitable for them. So of course, again, the aim of brokers is to make money, and that's exactly what they're going to do. They're going to do things to make money. The pros of STPs: and STP brokers offer identical prices with the interbank rates, especially those that charge commission instead of markups. There is no conflict of interest with the brokers, as there are more profits the trader makes, the more money they make, and the more the broker earns from spreads or commissions. So unlike market makers, when you make money, the trader, they make money. There are few trade rejections or requotes except in periods of excessive volatility, and of course that's unavoidable. If there's a lot of volatility and price movements, there's going to be some chances that your trade will not be executed at the right price. There can be positive slippages, and of course positive slippages mean your trade is executed in a way where not the price that you were wanted or you placed in an order, but of course you become profitable in that sense. These brokers often offer negative balance protection. So of course that is something that most traders need, or every trader needs. Cons of STP: floating spreads can widen at any time and present the risk of being stopped out. This is what most persons might even refer to as stop-ons. But of course it's just the risk we take trading in the Forex market. There are overnight fees. Of course, we know that sometimes we may get swaps. There can be negative slippage. Negative slippage is very bad for anything. Of course, that causes loss. Now, the final broker is electronic communications network, ECN. The traders that use ECN brokers get their orders directly with counterparties in the liquidity providers. An electronic communication network or ECN Forex broker generally does not have its own dealing desk. Instead, the broker provides an electronic trading platform in which the professional market makers and banks, as well as traders and other forex market participants, can enter bids and offers through their system. And of course, we spoke about this already, of the different types of how ECN brokers function, and it's a database that holds all the trades from the banks, traders, and other institutions. The pros of ECN: it offers interbank price calls. It offers tighter spread. There is no conflict of interest as the broker does not trade against the client. Traders can implement any strategy they want. Now, cons of ECN: the spread can change widely depending on the market liquidity and volatility at the time. Of course, we know that whenever they are placing a trade in the ECN, it is linking it to something that matches. So if there's few persons in the banks, retail traders, or other institutions that are trading, of course the spread will widen because liquidity is low. There can be many orders rejection or recalls. Again, I said again, it has to match to be executed. Traders pay commission in addition to the spread. So that is self-explanatory. There are overnight swap charges. We spoke about that for the ECN, and they are so both for both ECN and STPs. Here we are at the end of another chapter. This is TSW Forex free course, beginners course. This was chapter 4, and we spoke about brokers, types of brokers, and the pros and cons of brokers. I hope that you guys found this video educational and very easy to understand. And I hope that we shed some more light on what brokers are and the different types of brokers. A lot of persons have questions as it relates to them. Maybe we may consider dropping a list of the different types of broker in the comment section. But for now, thank you for watching, and I hope to see you in the next video. Thank you for the subscribers, hitting that notification bell as well. Thank you for your support, and if you're new to the channel, be sure to subscribe. Thank you.